Hi, I'm going to work you through the lecture example on calculating depreciation. So this is the first tab called exercise, and it gives us a number of scenarios. Okay, so we've purchased an asset. The business owner purchases a new vehicle on the 30th of September, so we know it's part way through the year. So the first thing is it's not going to be a full year's worth of depreciation. If you bought an asset during September, you count September. So September through to March is going to be 7 months. So we're going to have 7 months worth of depreciation. Okay. So it wants us to work it out in a number of different scenarios. Okay. For me, the easiest way for me to work things out is to probably use something like a depreciation schedule. Okay. So just as a quick cheat, what I'm going to do is I'm just going to copy these headings over. Hopefully they copy. Yep, they did, which is good. All right, so that gives me a bit of a template. Okay. So yeah, for me, normally it's setting up a work paper to help me work through things. Okay, rather than just trying to calculate it in a cell. I can always put the answers up there afterwards, right? Okay. Purchase date is the 30th of September. Okay, so that's all right. 0917. Cool. All right. So there's a number of different. I can do the number of different society. Okay, the historical cost is going to be the same for all of them. Every scenario. Okay. So how many different scenarios are there? There is only 4. Okay. Cool. So that's the historical cost. Okay. There is no accumulated depreciation because it's a new asset. Okay. Now sometimes people just enter it sometimes there's another column just to show that things are new. All right. But okay. So that's pretty straightforward. The depreciation rate. The first example is 30%. Okay. Let's make sure that's picking it up as percentages. Okay. Make sure it's 30%, not 3,000 or whatever that came up as. And then it's the next scenario is 21%. I'm just picking these figures up from here. All right. Okay. I'm going to leave this one here for now. I'm not going to put in a rate. Then it comes down to what is the method. This is diminishing value. Okay. This is straight line. These will be straight line as well. Okay. So these are all straight line methods. Okay. Okay. So I'm going to change those to dollars just to help me. Okay. The depreciation amount is going to be the book value. Okay. It's diminishing value. So it's the book value. Okay. Times the depreciation rate. Because it's not a full year, we need to work out what 7 months is. So the best way to do that is to divide by 12 to give us what 1 month is, and then times it by 7. Okay, so that will give us the rate for there. All right. Okay, that's dollars. Okay, all right. So that's pretty straightforward for that one. The accumulated depreciation will be the opening accumulated thing. Even though there's 0, I more often than not, you include the cell anyway, because let's say next year you open up the spreadsheet, otherwise you'll have to redo all the formulas, okay? But you can actually sort of roll these things over year to year if you're doing schedules on spreadsheets. Okay, so that should give it that. And the book value is what the opening, it's either the opening book value less the current depreciation, okay, okay, or it's the historic cost less the full depreciation. Both will give you the same result. So if I go, what's the total cost less the total accumulated depreciation, that will give us the book value. All right. So I just carry on working down these examples. So business owner purchases a motor vehicle on that date. Please calculate the depreciation. Okay, so I can actually put that answer in there. And the answer is this amount here. Okay, so that's the answer to that one. I can continue on. So this one here is a straight line method. So it's the same amount every year. Okay, so that one there is always going to be that times what it originally cost us. Okay, so you set the formula up to get the historical cost. With the diminishing one, you set the formula up to get the book value. Okay, again, that's a full year. So same goes here, divide by 12 to get a month's worth, times how many months? 7 will give us the value there. Okay, I just show full dollars, I don't bother about cents. Okay, these formulas will be the same all of the way down. Okay, so depending, okay, so that's, yeah. Okay, so now we're down to the third one. Okay, so that was the first question, second question, third question, fourth question. Okay, I'm going to complete these. Okay, so there's the answer to this one. The depreciation for that one is that amount. Okay, right, the next one says it's going to last 5 years. Okay, and it's going to have a residual value of nothing. So after 5 years, okay, we need to have written that off. Okay, so we're only writing off 7 months now. Okay, so we need to work out how much that is a year. All right, so if it's over 5 years, okay, it's going to be that divided by 5 is how much we need to write off each year. Okay, I'm just going to put this out to the side here. So that would be what it cost us equals 24,990 divided by 5. Okay, that's how much we need to write off every year. Okay, per annum. Okay, and therefore, how much is that going to be each month? Okay, so every month, and I'm doing this because we're only doing 7 months in the first year. So for every month, it's only going to be that amount. All right, we've got to divide that by 12. Okay, so that's how much it's going to be a month. Okay, so for this period down here, the one we're doing now, for 7 months, it's simply how much is it a month times 7. Okay, and that will give us the amount for that 7 month period. Okay, all right. So what I'm going to do in there is it's that. Okay, because it's only 7 months. All right. Okay, and that gives us the answer. I can pick up the answer from up there or down here. Okay, so that's fine. Okay, all right. After this year, pretty much you can just use the, well, it's going to be that amount every year, right? Okay, it's going to be that amount per annum. Okay. So that's the amount it's going to be every year hereafter. Okay. All right. Okay. The next one, it says it's got a residual value and it's going to last 4 years. Okay. So this is relating to this one here. So this next one, it says that after we're still going to have 7,500, right? So really the amount we need to write off is how much did it cost us? How much will we get when we sell it at the end? Okay, the difference between those two really is the amount that we need to depreciate over 4 years. Okay, so that's the amount we need to depreciate. Okay, so if that's over 4 years, that's going to be that divided by 4 every year. Okay, so it's going to be that amount per annum. Okay, so how much is that a month? Okay, it's that divided by 12 gives you how much it is a month. All right. Okay, so how much is it going to be for this 7 months? Okay, so it's going to be 1 month times 7. Okay. Right. So therefore we know that for that 7-month period, okay, it is that. Okay. I'm just going to fix up the dates I've got over here because when I copied that down, it actually added a day every time. Okay, so that's not right. Okay, so those are the examples for that first 7-month period. Okay, so that's the year ending 31st of March 2018. Okay, right. So we can pick up the answer for that one, and it's going to be depreciation amount there. Okay. Right, so some workings on the side here to support these ones. Okay, these ones are pretty straightforward in that schedule. Right, the next part of the question says, please calculate depreciation expense for the 31st of March 2020. So it's actually jumping a year ahead, right? 2 years ahead. So rather than it just being the next year, okay, okay. So the next year is going to be the 31st of March 2019, okay. Okay, and it's the one after that they're asking for. Okay, 03. So paste it, read the question carefully. 2020. Okay. All right. Okay, so it's the purchase date, the historical cost is all going to be the same. Okay, those things don't change year to year. Okay, so that's pretty straightforward. Okay. All right. The accumulated depreciation in this year will be whatever it was, the opening balance will be the closing balance from the previous year, right? Okay, so that all marries up. The book value on the 1st of the 8th, okay, I'll just change these dates here so that they show the right year. Okay, you're not graded on these markings, it's you getting the right answer, but I do these sort of things to make sure I've got the right answer, right? Because I'll be wanting to calculate the depreciation for the expense year into 220, right? So I want to put the right answers in here, okay? But I want to work through it in a way that I can sort of have a look at it and see if it makes sense and rework it if I've made a mistake somehow, okay? So for me, it's work papers are pretty important, okay? So I can see that I've now set this up. I know that the book value at the beginning of this year will be the closing book value at the end of the last year, okay? All right, the depreciation rates will be 30%, okay? The same, actually, I might as well copy all of that, okay? Copy, paste, okay? So the depreciation is a full year, so it's it's a diminishing value. So I take the book value times the 30% will give me that amount. Okay. Get rid of the cents. Okay. This one here will be that times the historical cost, which is that one there. Okay. all right? And we know that we've worked out the per annum ones for the other two ones, right? So that one there is always going to be that for a full 12 months. And this one here is going to be that one for a full 12 months. Okay, all right. Okay, so based on that, we know what the depreciation amounts are in that year. The reason I'm doing this is just so that I can get the correct book value for the year 2020. So accumulated depreciation will be what I started with, plus what I'm currently claiming. We'll come to that. Okay, it's the same for all of them. Okay, and the closing book value will be what was the either the opening book value less the current depreciation, or it's the historical cost less the full depreciation. Okay, so I'm going to go historical cost less the full depreciation should give me that amount. Okay, and there we've got it for 2019. Right, so 2020, the accumulated depreciation at the end is the opening book amount. Okay, the book value is going to be the closing book value. Okay, so that's as at the beginning of the year. Right, 18, we are going to, so that was the 1st December to the 31st, that's the 1st to the 4th to the 19, that's the 1st to the 4th, that one there is 2020, which is where we're heading to, and that one there is to 2020. Okay, so that's the book values. They should marry up. The depreciation rate is like that. Copy, paste. Okay, the depreciation amount, okay, is the depreciation rate times the book value. That one is the depreciation rate times the historical cost. And these ones are the same amount every year. So that one there is the full amount for the year. That one there is the full amount for the year. Okay, accumulated depreciation should be the same formula as that one there. So I'm just going to go copy, paste. Right. Okay, and then the book value should be the same formula as in here too. Copy and paste. Okay, so the question that this one is what was the depreciation in the 2020 year? So then it's this equals that. Okay, you can show the cents, or you can just show the full dollars. Right. Okay, this one here will be this one here, depreciation amount. Okay, this one here will be that one, and this one here will be this one. Okay, right, so that's giving you the answers. As I say, I like to do them in depreciation schedule so I can look backwards and forwards just to make sure that I get the right answers. All right, okay, so the next exercise is a depreciation schedule. Hopefully this one goes a little bit faster. Okay, this is relatively straightforward. It's a year. Purchase date, it doesn't have any. So what that suggests is they're all bought in previous periods. And because that's confirmed because there's already accumulated depreciation except for one. Okay, this one here was bought during the current year. So that's why it doesn't have an opening balance. It exists, but it just doesn't have an opening balance or any opening accumulated depreciation. But it is new, okay? All right, so let's just confirm diminishing value is the depreciation rate times the book value, okay? It's a full year, okay? This one here, I'll come back to at the end. This one here's straight line, so that's going to be the depreciation rate, which is 10%, times what we paid for it right at the beginning, the historical cost. Okay, so that's that one. All right, another straight line one, great. So that's the the depreciation rate times the historical cost. Okay, again, depreciation rate times the historical cost, great. And then finally, the diminishing value, depreciation rate times the book value. Okay, so that gives us all of those ones. Right, you can sum that column. So it gives you the depreciation, except for one, which we're missing. And so now we need to work on this one. So we know it's 25% of diminishing value. So it's going to be 25%. Okay, and the book value will be the historical cost because there's no thing. All right, so it's one of the same. Okay, so it's times that. All right, how many months is it for though? So we've got November. It was bought in November, so we count November, December, January, February, March. That's 5 by my counting. So divide by 12 times 5 will give us the depreciation rate. So that's our depreciation for the year. Okay, we want to have the schedule to show us what the accumulated amount is, which is the balance carried forward plus the current amount. Okay. All right. All of a sudden I can see that because of that depreciation rate and that amount, I can see that, and that must have been bought partway through the last year. Okay, so this should be the accumulated depreciation coming down there, and that can have a total too. And then the book value is, what was the opening book value? In this case, what I'm going to do is I'm going to say what was the historic cost less all of the depreciation to date. So the historical cost less every accumulated depreciation, right? The reason I'm doing that rather than the book value is because there's a 0 in that one, and that will not work for that cell that well. If I copy that down, that really should give us where we're at. Okay, okay, all right. It's interesting, that's got a balance of 5, isn't it? Anyway, you can sum that, and that should give you what the book value is. Okay, I'll just double check that to the solutions, and spot on. Okay, great. Okay, I'm pleased I got it right. Okay, next we go to the trial balance, and that's a matter of, okay, so this is, again, for me it's useful to know what's debits and credits. You know, for my own sanity, I'm going to insert a column, okay, and I'm going to we're going to go, that's debit and that's credit. Okay. All right. So motor vehicles is an asset, debit, asset, 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 asset. Depreciation expense is an expense, so that's normally a debit. The accumulated ones, they're all negative assets. Okay. So I'm going to put them over here as credits, right? Because that works better for me. Okay. The depreciation adjustment, okay, I'm going to do the same here. I'm going to insert a column, okay, because it works better for me, and I'm going to go debit and credit, right, okay. I'm just a little bit pedantic here, just going to, obviously don't need to do this in your thing, but, you know, to tidy it up, all right, okay. So that's how it stands. Obviously this isn't a full trial balance, and I wouldn't expect these things here to balance, right? But I certainly want my adjustments to balance, right? So anything I put in the adjustments column, I would hope to see actually balances. You know, the debits equal the credits, okay? So I'm going to test that for myself, right? Okay, so now if I was to say, what are the adjustments I need to do for this one here? Really, it's this is all of the amount that I'm going to add to the accumulated depreciation, right? Okay, so so it's accumulated depreciation on the motor vehicle. I need to increase it, which is a credit. Okay, so really on the motor vehicle one, it's going to increase by that amount. Okay, that's what it should increase by. Okay, the same for the plant. The accumulated depreciation should increase by that one. Okay, presume they might be all in the same order, and I might just be able to copy that down. Okay, so they should all be in the same order, and I presume if I just went like that, that should pick up the right figures. It doesn't look like it has actually. Otherwise it would add to that, wouldn't it? Okay, so no, I can't do that. Cheat. Okay, so then there's the accumulated depreciation on the furniture and fittings. Okay, then there's depreciation on the office equipment. Unless I've copied from the wrong folder, I might copy the. If I copy the right folder, that's in H8. H8, yeah, that's right. Okay. Yeah, that's right. I just put the wrong one in there before. So that figure there probably should support that I have picked up all of those correctly. That equals 6230. That equals 6230, right? So I've increased. It's 6 o'clock. I've increased all of those balances by that amount. All right. Okay. Right. Okay. So the debit figure should be the depreciation, which is obviously the balancing figure, which is how much depreciation. Right. So now that I've done the adjustments, okay. Okay, I'm just trying to do the presentation more, tidy it up more for you so they can see it a little bit better. You don't need to worry about it in the test. It's more of getting to the right answers, right? Okay, so now therefore the adjusted balances would be, there's no adjustments to the assets, it's all just around the accumulated depreciation, right? The fixed asset was already in there, okay? So the adjusted balance is okay. These balances are all credit against credit, so it's just a simple summation. Okay, right. The main thing is my adjustments balanced. Okay, debits equaled my credits, and that should be my closing trial balance. All right. So that's that part. The next part is the financial statement extracts. So the FS stands for financial statement. Up here they've said BS and IS, okay, abbreviations for balance sheet and income statements, right? So it is a blank sheet, and that's so it's testing your knowledge of what goes in a balance sheet and what goes in an income statement, okay? It does say that you only need to do an extract, okay? So really it's only the areas that these function in, right? I know that these are assets, and they will all go in the balance sheet, right? They'll all go in the balance sheet, okay? These are negative assets, and they'll all go in the balance sheet, okay? Here's something that's in the income statement. So the extract for the income statement is going to be pretty small, okay? And the extract for the balance sheet is just going to be the non-current assets, okay? okay, and that's going to list what they are, okay. All right, so if I was to have a look at that, the non-current assets I've got, these items here, okay, these are my non-current assets, okay, don't need to color code it. All right, that's fair enough, okay. And what I'm going to do is I'm going to say, I'm going to put a bit of a space in between them. Okay. I have to start doing that. Okay, so it's just sort of formatting them a bit. Okay, so it's the motor vehicles. Okay, then it'll tell me what my total non-current assets will end up being. Okay, so my motor vehicles, there's the closing balance. There's my plant and equipment. There's obviously faster ways to do this, but anyway, while I'm doing this, you can be office equipment. Okay, computer equipment. Okay, that's all pretty good. All right. Okay, so whatever it is. Okay, so whatever the you can either put it as a positive and then do your formula as a minus. I sometimes just actually say I'm going to just use it as a minus because then my formula will be easier to do. Okay. That doesn't quite look right, does it? Something wrong with the accumulated depreciation on the motor vehicle because it's more. Okay, so I think it's got something to do with my opening balance. I have picked up the wrong figures when I cleverly put in the credit column. I somehow have changed these opening balances because that is actually only 15,950. Okay, that is only 3520, and that is 2780, and that is 13190, and that is 8750. Okay, right, trap. Okay, anyway, so yeah, I'd picked those figures up wrong. So if I go back to here, that's better now. Okay, and that one there is less that. That one there is less make sure you pick up the right one. Furniture and fittings. Furniture and fittings is that one there. Okay, this one here. Trial balance. Okay, this one here. Is it the computer equipment? Yeah, got that right. Okay, then it's the kitchen equipment. Okay, is that one there? All right. Okay. All right. So you can actually put the number, the actual balance out to the side. All right. So that's the net amount. Okay. Cool. All right. And that should now sum. Right. Dollars. Right. It adds up to what our depreciation schedule does. So the balance sheet should match the depreciation schedule. Okay. So that's a good sign. All right. So there's our net assets, 170 grand. Okay. And that's the extract you need from the balance sheet. Okay, the extract from the income statement, or IS as they say here, income statement, is going to be pretty small. Okay, because it's only really because we don't have any other figures apart from the expense, which is depreciation. Okay, depreciation. We'll just try that, and we can pick it up off the trial balance, which is that figure there. Okay, and there it is. And again, that should marry back to the depreciation schedule. All right, so the depreciation schedule and the balance sheet should support each other, and so that should give you the financial extracts. All right, let's have a look at the model answer. Let's make sure I'm not off the mark. So that's as per the model answer. It looks the same to me. Okay. I've got a bit of another subheading here just above depreciation to say which area of that it goes through, but otherwise that's pretty much it. Okay, so that's working through that exercise.